A Dividend Aristocrat is a company in the S&P 500 index that has increased its dividend payment for at least 25 consecutive years. Their impressive track records of growth make them some of the most attractive dividend stocks to own. So much so that there's an entire ETF under the ticker symbol NOBL that tracks the S&P 500 Dividend Aristocrats. In this video, I'm going to analyze all 66 Dividend Aristocrat stocks. My name is Zach, and you should leave a like and subscribe to the channel if you enjoyed the video. Throughout this breakdown, I'll be using my own dividend investing software, which is available at dividenddata.com. It allows me to analyze my portfolio, track my dividend income, and conduct in-depth research on companies. If you like what you see, then sign up at dividenddata.com. Link in the description and pinned comment. Alright, now I'm going to briefly analyze all 66 Dividend Aristocrat stocks. Let me know if you want me to do a full stock review video on any of these companies. Let's start with the stocks that have the highest consecutive years of dividend growth. Dover, stock ticker DOV, has 66 consecutive years of dividend growth. Dover is a diversified global manufacturer and solutions provider. This industrial stock pays a sustainable dividend based on free cash flow generation. It has a payout ratio of 25%, so there is room to grow the dividend and reinvest in the business. However, the small dividend growth rate and earnings growth leave much to be desired. With a PE of 19, slow growth, and a 1.32% dividend yield, Dover does not seem like a great value at current prices. Genuine Parts Company, stock ticker GPC, has 65 years of consecutive dividend increases. GPC distributes automotive replacement parts, industrial parts, and materials. The company has reliable dividend and earnings growth of around 5% annually. They just had a 9.82% dividend increase and currently have a 2.5% dividend yield. It seems like a solid long-term dividend stock if you buy it at a fair price. Procter & Gamble, stock ticker PG, has 65 consecutive years of dividend increases. PG provides branded consumer packaging goods across the globe. They own countless high-quality brands and dominate shelf space at stores. The business has slow but reliable earnings and dividend growth while also performing share buybacks. However, they trade at a premium PE multiple of 28, which is quite high given their growth rates. The starting dividend yield is 2.2%. This is a company I would target if it saw a sizable decline in price. Emerson Electric, stock ticker EMR, has 65 consecutive years of dividend increases. EMR designs and manufactures technology and engineering products for industrial, commercial, and consumer markets worldwide. The company has very slow earnings and dividend growth, despite consistent share buybacks. However, their dividend is sustainable and will likely continue slowly growing. With a 20 PE and 2.16% starting dividend yield, there are better opportunities at current prices. 3M, stock ticker MMM, has 63 years of consecutive dividend growth. This industrial and technology conglomerate operates through 4 segments: safety and industrial, transportation and electronics, healthcare, and consumer. The company has reliable dividend and earnings growth, averaging around 5% annually. However, the company has slowed down its recent dividend increases after many years of high growth. The stock seems to be at an attractive valuation with a PE of 14 and a starting dividend yield of 4%. This is a stock that I own and I'm looking to buy more at current prices. Cincinnati Financial, stock ticker CINF, had 60 years of consecutive dividend increases. The company offers property causality insurance products. It has reliable dividend growth of around 5% annually. It has a low payout ratio of 30% with room to grow the dividend over time. Coca-Cola, stock ticker KO, has 59 consecutive years of dividend growth. This beverage company manufactures and sells various non-alcoholic beverages worldwide. They own a diversified portfolio of brands led by their flagship product, Coca-Cola. This is a great high-margin consumer product. Their dividend and free cash flow are slowly growing but sustainable. However, the company trades at a premium multiple with a PE ratio of 28 and a current dividend yield of 2.66%. This is a great company, but at their low growth rates, it'd be a much better buy after a sizable price decline. Colgate-Palmolive, stock ticker CL, has 59 consecutive years of dividend growth. CL manufactures and sells consumer products across the globe. They own high-quality brands across oral care, personal care, home care, and pet care. Once again, this is slow growth, but a very sustainable business, reliable low dividend growth, and share buybacks. It trades at a premium PE ratio of 31 and a starting dividend yield of 2.24%. If the price fell significantly, then this is a great dividend stock to pick up. Johnson & Johnson, stock ticker J&J, has 59 consecutive years of dividend growth. J&J is a diversified global healthcare giant operating in consumer health, pharmaceuticals, and medical devices. The company has reliable earnings and dividend growth of around 5% annually. It's a high-quality company and trades at a PE ratio of 23 and a starting dividend yield of 2.33%. A few months back, this stock was trading at a more attractive valuation. Hormel Foods, stock ticker HRL, has 56 consecutive years of dividend growth. They own a popular array of food brands such as Hormel, Skippy, Planters, Spam, and Justin's. Over the last 10 years, the company had very high dividend growth at a 14.43% compound annual growth rate. However, earnings growth has plateaued in recent years, slowing dividend growth. I expect this to continue, and the company will likely have slower but sustainable dividend growth moving forward. At a PE of 31.19 and a dividend yield of 2.38%, I don't think this is a good value given their slow growth going forward. Stanley Black & Decker, stock ticker SWK, has 54 consecutive years of dividend growth. The company creates professional and industrial tools while also operating some of the most popular consumer brands in their industry. SWK has reliable, slow earnings and dividend growth. However, the dividend has a lot of room to grow with a payout ratio of 29%. The company trades at an attractive PE ratio of 13 with a starting dividend yield of 2.2%. Federal Realty Investment Trust, stock ticker FRT, has 54 consecutive years of dividend growth. This is a real estate investment trust that owns first-ring suburb properties in coastal markets, focusing on high-quality locations in growing high-income and affluent areas. They mostly own outdoor markets and plazas that they rent out to retail stores, restaurants, grocery, offices, and residential. FRT has reliable, slow growth and a starting dividend yield of 3.53%. Cisco, stock ticker SYY, has 52 consecutive years of dividend growth. The company provides food and supplies to the food service industry. Historically, it had reliable growing earnings, but this business was significantly disrupted by the pandemic economic shutdowns. Obviously, restaurants being closed was quite bad for their earnings. However, it started to bounce back and will likely grow earnings into the future. The fact that they were able to continue growing their dividend in that time shows the economic strength of the company. Illinois Tool Works, stock ticker ITW, has 51 consecutive years of dividend growth. ITW manufactures and sells industrial products and equipment worldwide. They've had decent growth rates in recent history. Current PE is 23 and the starting dividend yield is 2.36%. Becton, Dickinson & Co., stock ticker BDX, has 50 consecutive years of dividend growth. This is a healthcare company that develops, manufactures, and sells medical supplies, devices, laboratory equipment, and diagnostic products. Free cash flow has grown rapidly in recent years. However, net income has lagged behind. I don't really know this company, but if I had to guess, they had some slew of impairment charges costing them money. The dividend has reliably grown at a slow rate in this time. PPG Industries, stock ticker PPG, has 50 consecutive years of dividend growth. The company manufactures and distributes paints, coatings, and specialty materials worldwide. This company has slow-growing earnings with higher dividend growth in recent history. The payout ratio is still low at 37%, so there's room to reliably grow the dividend over time. At a 22 PE and a starting dividend yield of 1.74%, this doesn't scream buy, but the stock has fallen nearly 30% from its high and could be an interesting company to take a look at. Target, stock ticker TGT, has 50 consecutive years of dividend growth. This company is a general merchandise retailer in the United States. It has reliable earnings and dividend growth along with share buybacks. Over the last 2 years, the company's earnings saw significant growth. This allowed them to increase their dividend payment 32.35%. On top of this, the payout ratio is still low at 22%. It trades at an attractive PE of 16 with a starting dividend yield of 1.5%. This is a company I will look into more and could be an interesting opportunity. W.W. Grainger, stock ticker GWW, has 50 consecutive years of dividend growth. The industrial company distributes maintenance, repair, and operating products and services. The earnings and dividend growth are pretty solid at 6 to 7% annually. It's currently priced at a 26 PE and a starting dividend yield of 1.25%. Not terrible, but especially compared to a company like Target, it's not a very good value. AbbVie, stock ticker ABBV, has 50 consecutive years of dividend growth. This company develops and sells pharmaceuticals. It's a fast-growing company that many dividend investors love. Its dividend payouts have grown at a 10% CAGR over the past 3 years. The free cash flow has been growing at a high rate. On paper, this stock was financially undervalued for quite a while. It was trading at a 9 to 10% free cash flow yield over the past few years. Over the past 6 months, the stock price has climbed by over 58%. It's not the deal it once was, but the company may be one you still want to add to your portfolio long term. Abbott Laboratories, stock ticker ABT, has 50 consecutive years of dividend growth. If you didn't know, AbbVie used to be the pharmaceutical division of Abbott Laboratories prior to it being spun out in 2013. Currently, ABT develops and manufactures healthcare products like diagnostics and medical devices. The company is fast-growing in recent years. It trades at a 31 PE and a starting dividend yield of 1.48%. AbbVie still seems like the more attractive opportunity of the two stocks. Kimberly-Clark, stock ticker KMB, has 50 consecutive years of dividend increases. This is a consumer products company that owns brands like Kleenex, Huggies, Depends, Kotex, Cottonelle, and Scott. The company has quality brands, but very slow growth. Its earnings have been hurt recently due to margin compression from inflation. If the stock got cheaper or growth rates improved, then this could be a good long-term dividend stock to buy. PepsiCo, stock ticker PEP, has 49 consecutive years of dividend increases. This is a very high-quality company with some of the best beverage brands. They also have great snack brands through their ownership of Frito-Lay. PepsiCo has reliable earnings and dividend growth with share buybacks as well. This is a dominant business that has a wide economic moat. However, it's highly valued and trades at a premium multiple for being a slower growth company. VF Corp, stock ticker VFC, has 49 consecutive years of dividend increases. This company owns and produces branded apparel and footwear. You'll recognize many of their brands like Vans, North Face, Timberland, Dickies, etc. They reliably grow earnings and have slow dividend growth. At a 15 PE ratio and a 3.5% dividend yield, it may be an interesting stock to look into. Nucor, stock ticker NUE, has 49 consecutive years of dividend growth. This company manufactures and sells steel and steel products. The company is an extremely slow grower with inconsistent earnings that derive from the commodity pricing of steel. Since steel inflation is huge right now, Nucor's earnings exploded. I doubt this will continue, and my prediction is the stock will crater back to earth over the next 5 years. I would not touch this stock at current prices. Archer Daniels Midland, stock ticker ADM, has 49 consecutive years of dividend growth. The company procures, transports, stores, processes, and merchandises agricultural commodities, products, and ingredients. ADM has reliable dividend and earnings growth. The stock price has skyrocketed in recent months due to the idea that commodity inflation will grow their earnings. It's trading at a P ratio of 20 and a 1.6% dividend yield. S&P Global, stock ticker SPGI, has 48 consecutive years of dividend growth. The company provides credit ratings, benchmarks, analytics, and workflow solutions in the global capital, commodity, and automotive markets. SPGI has very fast-growing earnings and dividend. The 5-year compound annual growth rate of the dividend is 16.28%. The payout ratio is 24%, so there's lots of room to grow the dividend over time. This is a company I want to do more research on. Consolidated Edison, stock ticker ED, has 48 consecutive years of dividend growth. This utility business offers electric, gas, and steam delivery. This company has very slow growth, but generates reliable and regulated dividend income. The current dividend yield is 3.2%. Automatic Data Processing, stock ticker ADP, has 47 consecutive years of dividend growth. This company operates HR and payroll solutions. ADP has reliable high earnings and dividend growth. It trades at a premium PE ratio, but on a decline, this could be an interesting dividend growth stock to own long term. Walmart, stock ticker WMT, has 47 consecutive years of dividend growth. It's Walmart, everyone knows it. They also own Sam's Club. Great company, but I'm surprised by their slow earnings growth. I'd expect more, especially with the success of their online shopping. The slow dividend and earnings growth makes it difficult to invest in the company at such a high PE ratio and low dividend yield. Lowe's, stock ticker LOW, has 47 consecutive years of dividend growth. This is one of the most popular home improvement retailers. Lowe's has very high earnings and dividend growth. It's really impressive. We're talking about sustainable 18% growth. They just had a 33% dividend increase. The dividend payout ratio is 30%, so there's plenty of room to grow the dividend over time. The company currently trades at a 17 PE and a starting dividend yield of 1.5%. This is a company that I'm looking to buy long term. Walgreens Boots Alliance, stock ticker WBA, has 46 consecutive years of dividend growth. This is a pharmacy-led health and beauty retail company. Walgreens has reliably low growth of earnings and dividends. This means you will need to buy the stock cheap. Luckily, it trades at a 6 PE, 10% free cash flow yield, and a starting dividend yield of 4.2%. McDonald's, stock ticker MCD, has 46 consecutive years of dividend growth. McDonald's is a very high-quality company with a great brand and reliable earnings growth. This is a very solid long-term dividend stock, but at current prices, I think there are better opportunities. Pentair, stock ticker PNR, has 46 consecutive years of dividend growth. The company develops water solutions for residential and commercial uses. PNR has low earnings and dividend growth, and it trades at a 16 PE ratio and a starting dividend yield of 1.6%. Medtronic, stock ticker MDT, has 44 consecutive years of dividend increases. The company develops, manufactures, distributes, and sells device-based medical therapies to hospitals, physicians, clinicians, and patients worldwide. The company has solid earnings and dividend growth. However, at a 30 PE ratio and a 2.24% dividend yield, there may be better opportunities given their growth rates. Clorox, stock ticker CLX, has 44 consecutive years of dividend increases. The company manufactures and markets consumer and professional products worldwide. They have a portfolio of well-known brands. This is typically a company with slow, reliable growth, but they are currently getting clobbered by inflation. This has cut their margins significantly, leading to lower earnings. The stock has fallen nearly 40% from its 2020 high and could fall more. However, this could lead to a buying opportunity long term. The Sherwin-Williams Company, stock ticker SHW, has 42 consecutive years of dividend increases. SHW sells paints, coatings, and related products to professional, industrial, commercial, and retail customers. They've been growing earnings and dividends at a high rate for many years. On top of this, they consistently buy back shares. The dividend payout ratio is 30%, and the company has lots of room to continue growing the dividend at a high rate. The stock has fallen 30% from its high and maybe is an interesting opportunity. Franklin Resources, stock ticker BEN, has 40 consecutive years of dividend increases. BEN is a publicly owned asset management holding company. It has slow earnings and dividend growth, but trades at a very low valuation, a 7 PE and a starting dividend yield of 4.35%. Air Products and Chemicals, stock ticker APD, has 39 consecutive years of dividend increases. APD provides atmospheric gases, specialty gases, equipment, and services worldwide. It's growing earnings and dividends at a high rate. Over the past 10 years, the compound annual growth rate of the dividend is 10%. It currently trades at a PE ratio of 25 and a starting dividend yield of 2.5%. ExxonMobil, stock ticker XOM, has 39 consecutive years of dividend increases. The company explores for and produces crude oil and natural gas. The earnings of this company will depend on the commodity price of oil. So right now, Exxon is making a killing at high oil prices. However, I bought this stock in 2020 when it took a beating from low prices. With oil companies and commodity businesses, you want to buy them when they're deeply out of favor. Right now, Exxon is trading at a 16 PE and a 4% dividend yield. Amcor, stock ticker AMCR, has 38 consecutive years of dividend increases. The company sells packaging and products around the globe. In recent history, earnings and dividends are growing at a very slow rate. It trades at a 19 PE and a 4% dividend yield. Aflac, stock ticker AFL, has 38 consecutive years of dividend increases. The company provides supplemental health and life insurance products. It has solid earnings and dividend growth. The payout ratio is 20%, which leaves lots of room for dividend growth. It currently trades at a 10 PE and a 2.2% dividend yield. Brown-Forman, stock ticker BFB, has 38 consecutive years of dividend increases. The company develops and sells various well-known alcoholic beverages. It grows at a solid rate, but is valued at a high multiple. Cintas, stock ticker CTAS, has 38 consecutive years of dividend growth. Cintas Corporation provides corporate identity uniforms and related business services. The business has grown at a high rate. It currently trades at a 38 PE and a starting dividend yield of 0.8%. Atmos Energy Corporation, stock ticker ATO, has 37 consecutive years of dividend growth. The company engages in regulated natural gas distribution and pipeline and storage businesses. The company engages in regulated natural gas distribution and pipeline and storage businesses. ATO has decently growing earnings and dividends. Chevron, stock ticker CVX, has 36 consecutive years of dividend growth. Similar to ExxonMobil, this business's earnings are highly reliant on the commodity price of oil. So right now, they are making a lot, which allows them to continue dividend increases when oil is low, like in 2020. McCormick & Co., stock ticker MKC, has 36 consecutive years of dividend growth. The company distributes spices, seasoning mixes, condiments, and other flavorful products to the food industry. MKC grows its earnings and dividends at a slow rate, but trades at a high PE ratio of 36. At a starting dividend yield of 1.7%, I don't think this is a good value at current prices. Cardinal Health, stock ticker CAH, has 35 consecutive years of dividend growth. This is an integrated healthcare services and products company. CAH has very slow-growing earnings and dividends. However, it trades cheaply at a 10% free cash flow yield and 3% dividend yield. T. Rowe Price Group, stock ticker TRO, has 34 consecutive years of dividend increases. This company has mutual funds and advisory services. T. Rowe grows earnings and dividends at a high rate with large share buybacks. I think this is an attractive stock at current prices and recently made a full stock review video. General Dynamics, stock ticker GD, has 30 consecutive years of dividend increases. This is an aerospace and defense company. GD has reliable good earnings and dividend growth. Additionally, the company buys back shares. It currently trades at a 20 PE and a 2% dividend yield. Ecolab, stock ticker ECL, has 29 consecutive years of dividend growth. The company provides water, hygiene, and infection prevention solution and services. ECL grows earnings and dividends at a reliable but slow rate. On top of this, it trades at a high PE multiple, making it unattractive at current prices. A.O. Smith, stock ticker AOS, has 29 consecutive years of dividend increases. The company manufactures and markets residential and commercial gas, heat pump, electric water heaters, boilers, tanks, and water treatment products. AOS grows its earnings and dividends at a pretty high rate. It currently trades at a 20 PE and a 1.7% dividend yield. Lind, stock ticker LIN, has 28 consecutive years of dividend increases. This is an industrial gas and engineering company. It grows its earnings and dividends at a high rate in recent years. West Pharmaceutical Services, stock ticker WST, has 28 consecutive years of dividend increases. They design, manufacture, and sell containment and delivery systems for injectable drugs and healthcare products. Over the last few years, the company has seen rapid earnings growth with a 47% 3-year compound annual growth rate. The dividends have grown much slower at 6% in that time. However, the payout ratio is less than 10%, meaning there is massive room for dividend growth. The stock trades at a very high PE ratio of 47 and only has a starting dividend yield of 0.2%. Roper Technologies, stock ticker ROP, has 28 consecutive years of dividend growth. The company designs and develops software and engineering products and solutions. ROP stock has very high earnings and dividend growth. It trades at a high multiple, but with more research, it could be an interesting opportunity. Expeditors International of Washington, stock ticker EXPD, has 28 consecutive years of dividend growth. This is a global logistics company. EXPD has seen rapid earnings and dividend growth. Given our recent supply chain disruption and massive demand, it makes sense that earnings have exploded over the past 2 years. However, it's unclear to me if that growth is sustainable or if it was a one-time burst that will eventually fall back down. I would need to do more research. Chubb, stock ticker CB, has 28 consecutive years of dividend growth. Chubb Limited provides insurance and reinsurance products worldwide. Their earnings and dividends slowly grow. However, it trades at a low PE ratio and an 11% free cash flow yield. People's United Financial, stock ticker PBCT, has 28 consecutive years of dividend growth. This is the bank holding company for People's United Bank. PBCT has slow-growing earnings and dividends. It currently trades at a 14 PE and a 3.77% dividend yield. Caterpillar, stock ticker CAT, has 27 consecutive years of dividend growth. This company manufactures and sells construction and mining equipment, diesel and natural gas engines, and industrial gas turbines. Their earnings fluctuate but trend upwards. The dividend growth rate is pretty high and seems sustainable. The company trades at an 18 PE and a 2% starting dividend yield. Almarley, stock ticker ALB, has 27 consecutive years of dividend increases. The company develops, manufactures, and markets engineered specialty chemicals worldwide. Earnings growth has been flat, and the stock trades at a crazy high multiple. There seems to be a lot of speculation on the stock right now. Essex Property Trust, stock ticker ESS, has 27 consecutive years of dividend increases. This REIT acquires, develops, redevelops, and manages multifamily residential properties in selected West Coast markets. Its earnings and dividends have grown reliably at a slow rate. Orion Office REIT, stock ticker ONL, has 27 consecutive years of dividend growth. They own office buildings in high-quality suburban markets across the U.S. Realty Income Corporation, stock ticker O, has 27 consecutive years of dividend growth. This is a monthly dividend stock that's beloved by dividend investors. It currently offers a 4% dividend yield. I made a stock review video in the past. International Business Machines, stock ticker IBM, has 26 consecutive years of dividend growth. IBM provides integrated solutions and services worldwide. The company is in a turnaround and has had declining earnings over the past few years. The stock trades at a 5.1% dividend yield and could be an interesting value play. I would need to do more research. Next Era Energy, stock ticker NEE, has 26 consecutive years of dividend increases. The company generates, distributes, and sells electric power through wind, solar, nuclear, coal, and natural gas facilities. The dividend grows at 10% annually, but this hasn't been fully backed up by earnings in recent years. This stock trades at a high multiple and low dividend yield, so it would need reliable future growth to make up for that. Brown & Brown, stock ticker BRO, has 25 consecutive years of dividend increases. The company markets and sells insurance products and services. Earnings and dividends have recently grown at a decent high rate. However, the company trades at a premium PE ratio of 35 and only has a starting dividend yield of 0.5%. I don't think these dividend growth rates justify the valuation from first look. I don't think these growth rates justify that valuation from first look. Finally, Church & Dwight, stock ticker CHD, has 25 consecutive years of dividend increases. The company develops, manufactures, and markets household, personal care, and specialty products. They have many brands you'd recognize. CHD earnings have grown at a reliably high rate. Over the past 10 years, net income has grown at a 12% compound annual growth rate. The dividend has grown closer to 5% in recent years. However, the payout ratio is 30%, so there's plenty of room for future dividend growth. This is a stock I may have to dive deeper into. So that's a brief overview of all 66 Dividend Aristocrat stocks. If you found this interesting, subscribe and check out dividenddata.com. Don't take any of my opinions here blindly, and be sure to do your own research before making any investment decisions. Thank you for watching Dividend Data. You can sign up for dividenddata.com to use this software and join a Discord community of like-minded investors. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. Link in the description. Please leave a comment below, and thank you for watching.